Hello traders, Gary Wagner here, just after 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is May 17th, 2019, and this is the daily report for gold and silver, our weekend review. And what a way to end the week, with dramatic sell-offs continuing across the board in the precious metals. That coincides with a U.S. equities market that is also trading lower. And the interesting thing is, what is cited as the primary input for lower stocks is the fact that the Chinese-United States trade war has now deepened a little bit more and concerns have grown. However, they did not focus on some strong economic data, which is exactly the opposite of what happened in gold. They did focus on the strong economic data, taking it lower, and disregarded the talk about the trade war deepening. And I find that quite interesting. But let's take a look at our current pricing. First of all, gold did drop $8.80. That's almost 0.7% today, closing at $12.7740. Silver declined by over 2% on the day, 1.02, and is currently fixed at $14.39. Platinum lost 1.7% at $819.40. And palladium dropped by 1.34%. That's a decline of $17.80, currently fixed at $1306.90. That all with some slight headwinds from the US dollar of about 0.18%. Let's take a look at our technical studies. So traders, I want to start today's show off by looking at a weekly candlestick chart of gold futures. What we can discern from this chart is, first of all, that this week had the highest high that we have seen since this candle here, and that of course occurs the first week of April. However, it was unable to sustain that move. Monday is when we got that big price swing up, but by the end of the week, we had 3 solid days of selling pressure. Today, yesterday, as well as Wednesday, actually taking gold substantially lower on the week. We have 2 basic fib retracements on this chart. The first retracement that we're looking at is this long-term retracement from 85 up till 1349.50. And you can see that the lows that came in really formed a double bottom, and that's quite obvious on a weekly chart. You can see it on a daily chart, but it's absolutely clear on a weekly chart. The following week, it did close higher on the week because we closed at approximately 1280 the prior week, but this week is a new low that we haven't seen since the double bottom formed. Now, where could gold prices go? Well, the other data set that we're using is going to give us more of an indication, because simply put, it begins at the double bottom, it concludes at the highs at 1302, and we've gone past the 3.8, the 0.50, and in fact the 0.618. And as you can see, I have just entered the 0.78% retracement. That comes in at about 1275, which matches up with the low, but the close is above the 78. If we breach this particular level, we could in fact challenge these recent lows at 1267, and that would negate our current Elliott wave call, because we are looking at a scenario in which we are in a 5th wave. And as long as the market does not break below this price point, that would remain intact. Let's take a look at a daily chart. And when we do that, you can see the defined loss of about $23 on the week from these highs at 1305 to the current close, which is 1277. We can also see the 0.78, but just below that is the 0.50% retracement, and that of course is from this long data set. And so what that would do if we broke below it is change the current get Elliott wave count as well as my manual count, which unfolds as follows. The corrective wave 2 ended roughly in November of last year, and prices at that point were trading at approximately 1195. That marked the beginning of a long wave 3, which took pricing from 1195 up to the high achieved this year, which is $1,350 per ounce. So it was a pretty extended wave 3, and the corrective wave 4 was even stronger because, first of all, it gave back roughly 50% of the gains that we saw in wave 3, and you can also see the double bottom that we spoke about on our daily charts as these two lows right here. However, it does say that the second occurrence of these lows mark the conclusion of wave 4 and the beginning of wave 5, with the anticipation of gold going to either its former highs at 1349 or as high as 1360. However, before we get there, we have to weather this current decline, and we have to see if gold is able to find some sizable support at this current level of 1267. Traders, we took profits the other day. It wasn't as much as I had hoped for. We took $613 per contract, and we are currently flat with no active trades. My recommendation is that we maintain our neutral position and look to see how the market reacts next week, whether it finds support in this area or wants to drift lower. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Tuesday for the next daily update and review. Have a respectful Memorial Day. Bye-bye.